Hi, I'm Kathy Boyle.
And I'm Ed Boyle, and we're co-owners of Katchen Company Real Estate. For those of you who aren't familiar with Katchen Company, we're a full-service boutique real estate firm offering both residential and commercial property solutions throughout the greater Denver metro area. So, Kath, what are we going to talk about today?
So, I think that a great topic for today is one that I've gotten a lot of questions about over the last number of weeks. And that is, are we having a housing bubble right now? And when is the bubble going to burst? That's the big question.
That's a good topic to talk about. I've been getting a
Okay,
lot of questions about that as well.
great.
So I think the place to start is looking at what happened the last time we had a housing bubble.
I agree.
Okay. And the thing was, is that there are a couple of elements to it. One of them was an economic downturn. So people were losing their jobs. Okay. And with that, people had bought homes, but by very loose financial standards. There was very little money put down on houses, and so people just marginally qualified to purchase them. And so
Right.
when they lost their jobs, the thing that they had to do is look at where are we going to be able to save? What are we going to be able to do? We just have to feed our families. There's a lot of other responsibilities, and so the house fell as the last thing, making that mortgage. And the reason is because if they lost the house, it wasn't like they had a ton of money in it, and so they really had nothing to lose. And so a lot of people just walked away from it, and there was just a glut in the marketplace of homes that the banks got back, and they had to take them put through the foreclosure process and put on the market. And that's
Absolutely.
why prices dropped. There was just too many houses on the market and banks that wanted to get rid of them. And so they sold them at a discount. But I
And
don't
there,
think that's going to happen.
right. I mean, then the supply just out was like there was so much more supply than demand that it drove the prices down.
That's right. You
Yeah,
know, so when you look at it today, um, think about what's occurring in our marketplace. We have
right.
the baby boomers, which is a very large group of people. And normally, as people get older, they sell their home and they downsize.
Right.
They may get into a smaller single family home. They may go over to a townhouse or a condo, or they may move into an apartment. But the baby boomers have decided they want to age in place. So they're staying in their homes. Yes, there's some movement, but not the way that we saw in previous generations. And
Right.
so we're not going to see a huge glut of homes go on the market as everybody reaches 62 and retires. Okay.
We're
On the
not
other
moving.
side of the coin, we have the millennials, who's a larger group of individuals than the baby boomers, and
Right.
they're now getting at an age where they're marrying, deciding to have families, are no longer wanting to live in the trendy downtown condominium, and they're wanting to move to the suburbs and buy a single family. And so the
Right.
demand for housing is increasing with a supply not being furnished by the baby boomers. So I'm just
Exactly.
not seeing that that's going to create a bubble. What are your
Well,
thoughts?
what I agree because the fact of the matter is that you know the demand is still going to continue to be high because of that factor, and so the prices are going to still maintain their value, right? So you're not going to see prices plummet or values go down because it's you still are not shifting the paradigm. It's not going to happen. And the other point of that is that after what had happened in 2008 and what was happening in the mortgage industry, that industry now has really tightened up regulations in a way that it will not allow that to happen again. And that's why you have to be rigorous in trying to get a loan, right? They're just not giving loans to everyone because they saw what happened because of that.
You make a good point.
Yeah,
Another thing to consider is that Colorado has more people moving in than they have
mhm,
moving out. And so that creates another place where there's going to be additional demand for housing.
Right.
So, I think that will also support the prices that we have in housing, and they'll continue to go up. Even though they're building apartments, and we have the housing industry also constructing condos, townhomes, and single family homes, they
Right.
can't really supply enough homes to the market to kind of make a big difference in it. And the thing is that the cost of materials is continuing to increase. And I don't really see any of that stopping anytime soon. There's been so much concern over environmental issues, and those restrictions have been put in place. And so it's just going to continue to raise the cost of materials that we see. So, I think that's an important thing to consider. Interest rates are moving up a little bit, and people are saying, well, maybe with the increase in interest rates, it'll put fewer buyers into the market. Well, I don't think that it's going to diminish the quantity of buyers that much either. And while interest rates will move up, they're not as high as what they were in the 80s. And in the 80s, we never saw that. People were still buying houses, so I'm not seeing that.
Yes. Well, and people have to realize that, like when we bought our house in the 80s, and what our interest rate was at 12 or 14%, right?
Yep.
And so now when they're talking about the fact that rates are moving up to like 3.5%, maybe 4%, it's incredibly different, for sure.
Yeah. So overall, I have to believe that at the end of the day, houses are continuing to take and maintain their value, and that you don't have to be fearful that if you bought your house today, that you're going to wake up tomorrow morning and you're going to go, oh my gosh, it's worth $100,000 less than it was yesterday. Not really believing that that's the case. There definitely, I believe there's going to be a slowdown in the appreciation of homes as we start to get an equalization of inventory with the demand. And I'm thinking that we should start to see that moving into the third and fourth quarter of this year, and that it will be really realized by the second quarter of next year.
I think you make an excellent point, and I agree.
Okay. Well, I think that we've taken and talked about this enough. So I believe that we'll go ahead and call it a day. So I am Ed Boyle, and you can reach me at 303-564-5387 or eboyle@katchencompany.com.
And I'm Kathy Boyle, and you can reach me at 303-507-0859 or at kboyle.kb@gmail.com.
Well, you guys have a great day.
Thanks for joining us as always. Take care and have a great week.